Thank you, Nalika. Good morning, everyone, and thank you for joining us on our earnings call for Q4 for the financial year 2021. Mr. Vijay Kumar, our CFO, and Mr. Durga Prasad, our Senior Manager Accounts, and Stella, IR Advisors, our Investor Relations Advisor, are on the call with us today. I hope you had a chance to go through the investor presentation that was uploaded on the website of the stock exchanges. Welcome everyone to this call. Before we start, I hope that you and your families are keeping safe and you're in the process of getting vaccinated or already vaccinated. While I'm sure you have heard this on calls for all companies, many companies who are into into manufacturing especially. Let me reiterate that the COVID-19 has, of course, thrown up multiple challenges. The fallout of which continues in some aspects or other for many industries. For our industry, the seafood industry, that is an export-oriented industry, also which primarily uses reefer containers, it has meant that key consumption events such as celebrations have gone down, restaurants are being closed, and the demand for shrimp from these centers has seen a downward trend last year. However, there has been an uptick in compensatory demand that has been flowing from in-home consumption during the past year, leading to increased sales at supermarkets and shops. Perhaps the most challenging aspect of the year has been the turmoil that was caused in the transportation of our products, with containers not being available and vessels being cancelled. There was a high demand and availability of workers in shortage due to various availability of various logistics related workers due to various SOPs of different countries with release to the minimum presence of 30% of the employees, etc. There have been inordinate delays caused in shipments with regard to our industry. If I were to explain the year on a quarterly basis, in the first quarter, we saw a sharp dip in demand, labor availability, and transportation. Things improved in the second quarter on the demand and labor availability, but transportation remained an issue. In the third quarter, demand was stable. However, transportation, now more specific to global logistics pertaining to shipments, was a big issue. For the fourth quarter, which is traditionally a weak quarter for the industry, demand was strong and growing, and things looked to be getting better. Now coming to the impact of this on our financial performance. Even in this challenging period where restaurant demand had been reduced for the most part, we have achieved about 96% of our pre-COVID sales volumes, which is an indication that the demand for our products and our long-standing relationships with our customers has been going strong. The realization for our products continues to improve on the back of improving product mix. The share of higher margin ready-to-eat products contributed over 21% in the Q4 FY21 and about 15% in the full year. We see this as a strong driver for future growth in both top line as well as the margins. As you are aware, the government reduced and actually removed the total benefit of MEIS, Merchandise Export Initiative Scheme, from the month of September to December 2020, and discontinued it completely from Jan 1st, 2021, without the replacement scheme being operationalized. In spite of this, our EBITDA margins remain almost flat on the back of the improved product mix and operational efficiencies. With the first full year of operationalization of the new plant during this year, our depreciation expense was it went up, and further transportation issues resulted in increasing of our working capital requirements due to higher receivable days and inventories, which were getting stuck because of the lack of the equipment for shipping the products. And this also there was additional costs related to logistics, primarily the freight costs, which had gone up by almost 250 to 300% compared to pre-COVID levels. It resulted in our PAT reducing to 44 crores for FY21 from 60 crores in FY20. A quick update on the progress of our other efforts. On the hatcheries, as we had stated in our last call, we have discontinued the lease facility and the construction of the phase 2 of the hatchery at Concall is completed. We are awaiting regulatory approvals and audits for the facility to commence commercial operations. With this, our entire hatchery-related requirements are sourced in-house. With regard to the farming operations of the company, we have been indicating over the last few quarters, and I personally have been informing over the quarterly calls, that we want to focus more on the core activity of processing and export, and accordingly been consolidating the extent of area under farming for the company. In the past fiscal, our consolidation efforts have culminated, and we now only own about 120 acres of farmland. This will, however, be assisted by the hatchery business with regard to the seed supply, which is, of course, primarily meant for developing our relationships with the farmers, which is also going to pave way for ways to look at more buyback arrangements and have our network building as well as contract farming with minimal investments in the seed supply. And we make our relationships with our farmers much stronger by giving them quality seed and also do the buyback of raw materials from them. Now, coming to the outlook for the industry, all the closures which were there during the past year, especially those which were partially closed, unfortunately, the restaurants, the food service segments, which were a sector which was closed completely, permanently, has not yet been restored by replacements. But several restaurant chains have reopened, and now they are working, especially in the US market, they're working at 100% occupancy, thanks to the high number of vaccinations which have been done in that country, and so the life is getting back to normal in USA especially, and hence our exports to our largest market, USA, continue to be going steady, and we look forward to growing it further as we are able to improvise our capacities over the next 1 to 2 years, subject to the logistics issues being resolved at the earliest. The European Union, which is our second largest market, the consumption has been stable. In fact, the demand has picked up similar to the USA because of the food service sector opening back. Vaccinations are also happening in good number. We have had an increase in inquiries in the EU market of late, especially during the past 3 to 4 months. And we are looking at ever growing that part of the market also. China, where the company primarily does commodity shrimp, mainly in the form of headless blocks, we have been still maintaining it at a lower level because the company mainly has been focused on value-added products, both in the raw format as well as, ready to cook, as well as in the ready to eat. We are looking at value-added products mainly, and hence our exports to China will continue to be minimal. However, with regard to the Chinese market, there were some constraints, some restrictions on some companies, not Apex Frozen Foods. I would want to reiterate that and reaffirm. Just want to give a clarity on that because there was some news. We don't have any issues. It's generally there are conditions at some of the Chinese ports where we are not able to ship, but we are able to ship to the other ports where the not much of problems, and we are continuing to do our shipments to China as we get the containers. Our company doesn't have any restrictions laid out by the Chinese government, as stated by some sections of the media, and to be precise, social media. With that, I now request Mr. Vijay Kumar, our CFO, to take you through the brief highlights of our financial performance. Vijay Kumar.
Thank you. Good morning, everyone, and hope all of you are keeping safe. I shall brief you on the financial highlights of the quarter and full year gone by. As mentioned earlier, our product mix has been improving with higher proportion of retail and the value-added products, which have aided the overall realizations. For the quarter ended March 31st, 2021, our export revenue grew by a strong 38% year-on-year and 15% quarter-on-quarter to rupees 1,732 million as against rupees 1,256 million in Q4 FY20 and rupees 1,500 million in Q3 FY21. The growth in export revenue was a result of improved volumes, which grew by 30% year-on-year and 22% quarter-on-quarter to 2,656 metric tons in Q4 FY21, and higher average realizations of our $9 per kg of shrimp sold. Despite a challenging year and lower volume for full year FY 2021 too, the export revenue grew by 3% year-on-year to rupees 7,705 million. The sales volume grew by 4% year-on-year to 11,701 metric tons. As far as the profitability is concerned, EBITDA margins were not materially impacted considering the challenging environment, comprising mutual dispatches, higher fixed costs due to lower utilization of our newly expanded capacity, lower export incentives, and such others. This was an outcome of our improved product mix and operating efficiency. The EBITDA for Q4 FY21 grew 14% year-on-year to rupees 212 million and accounted for 11.5% EBITDA margin. For the full year FY 2021, EBITDA came in at rupees 985 million as against rupees 1,060 million in FY 2020. On the margin front, FY 2021 clocked 11.9% EBITDA margin as against 12.5% in FY 2020, a margin fall of 60 bps year-on-year. Further, higher depreciation due to commissioning of the new plant, coupled with increased finance costs due to elongated working capital cycle, as both inventory and data cycle was stretched due to transportation issues, resulted in decline in PAT level. The PAT for Q4 FY 2021 came in at rupees 84 million versus rupees 92 million in Q4 FY 2020, and for the full year FY 2021 at rupees 443 million as against rupees 606 million in FY 2020. The geographical breakup of sales in FY 2021 is as follows: 81.6% came from US, about 14.3% from EU, while the balance 4.1% came from China. With that, I conclude our opening remarks, and now I request the moderator to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashwini Agarwal from Ashmore Investment Management. Please go ahead.
Hi, good morning, Mr. Chaudhary. Good numbers, in a reasonably tough environment. I just wanted an update from you on the US regulatory side. So for some types of products, I think one of your facilities was listed on an import alert in December, and one line was reported to have been turned back sometime in March. And just yesterday, yesterday there was a US FDA alert on salmonella infection in Avanti Feeds ready-to-eat product line and a product recall. Your focus has been to increase the ready-to-eat and pre-prepared shrimp, especially in the US market. How are you seeing this risk evolve and how are you addressing this problem?
Yeah. It's actually, first of all, thanks for coming onto the call. I need to first, discount your question about Avanti Seeds, as I'm not the person to be answering about them. But since you are asking about the general system or the risk perception with regard to the US market as such, regarding the alert which you are referring to about Apex Frozen Foods, it's about antibiotic-related issues for which, in fact, since January, consignments have been tested and they have been released. This particular, we have been put on the alert because of one specific consignment which was having an issue. That's one line item, as you rightly mentioned, even though there are multiple line items in the consignment. So, of course, these was all the products which were primarily handled and shipped during last year when the COVID issues were there. And otherwise, we don't normally have issues related to antibiotics as the testing is done pre-harvest and also prior to processing at the factory. So we don't really have issues. In fact, we know when there is a positive, and we do maintain stocks of antibiotics products because that's how we test. We know that products have such contaminants in. So now in this case, as I had mentioned, there was a specific issue and that has been dealt with. However, the consignments subsequent to that have been held and tested and released. And even that one particular consignment which the FDA has had an issue with, it was actually retested and there were no problems pertaining to that. That is with regard to specific antibiotic alert. That is, and in fact, we are in the process of getting our one specific facility being removed out of that alert. So it's not an issue. We don't really see it as an issue because we mitigate the risk by prior testing, number one. And in general, I have been stating this for the past few years since we got listed that any market which we want to do business with has its own set of rules and norms. It is at their discretion to test for in the specific product of the specific parameter what they want. So definitely, if we are to do business with a specific market, we have to implement the rules. But however, when it is a laboratory testing, we all have to have an understanding, and I'm pretty sure nowadays everybody has a clue about that with regard to COVID. Like how there are possibilities of having false negatives, there are also possibilities of having false positives. That particular phrase of false positives actually applies to quite a number of companies which have their own systems and protocols in place, the required systems and protocols in place. And that, of course, indirectly I would also answer on behalf of anybody else whom you want to refer to, but that is how it is. There are with the amount of systems in place on the protocols, because these are required by the importing countries, whether it is USA or European Union. So when 20 to 25% of approximately around 20% of our business goes to EU, we have every alternate container, every second container being tested in EU also for antibiotics. But whereas we ensure that these products do not go to those markets, and we ensure that we don't handle them. So, in fact, after this particular issue, we have also intensified our own segregation and basically refusing the lots at any such specific source level, so that we don't have to deal with any repercussions subsequently. So that is the general point about the alert. But it is not a risk. It is, of course, we just need to implement it at at our entry level, to be precise, so that we don't need to deal with any headaches or problems at the end, at the finishing line. I hope you understand that.
So then, on salmonella specifically, specifically, I know you may not want to comment on what happened to another company, but is that a risk only for ready to eat, or is that something that happens even for ready to cook? And have you faced that problem in the past ever?
No, we have not faced that problem, but as I'm saying, that issue will be there for all products, from fish in general for seafood, any raw products, raw meats, even chicken. So when they would be testing, they intend to test, they will test. If they want to intensify their testing, they would, like EU does it for the past, I think 6 years or 7 years since we have been testing every second container for antibiotics, for example. Like that, US FDA has its own set of norms, like how Indian rules of import departments like animal husbandry or phytosanitary conditions which they implement. So that is there for all the products. It's not about only cooked or ready to eat or ready to cook. It will be there for all the products. They can test. It is, as I said, it is in the we have to implement the system, whether it is testing or whether implementing the right process, and that is how we ensure that we avoid any complications at the finish line. However, it does not mean that if there has been a test positive or if there is an alert, it doesn't mean that there is a system failure. Because as I had tried to mention earlier, like how we are noticing quite a number of false positives, and because it's a laboratory test, it is all it depends on what equipment is used and the time of the person who has handled the testing, etc. And errors are there with regard to machine readings also. So that is how it is. So, but salmonella is there for all products, not just shrimp or not just ready to eat. It will be there for them. Okay.
And so on the second question I had was relating to the working capital inventory increase. Obviously, because shipping times have increased and the duration that it takes for a refund to show up in the US has increased, that would be, I'm assuming, the principal cause of the increase in receivables. Is that the only reason, or is there something else also which is causing your receivables to spike up from roughly about 70-80 crore levels to 150 crore levels?
No. There are two things. One is primarily the container-related issue, which is going around. We get payments of around 40, 45 days, 50 days. Sometimes it's increasing depending on ports. But then there has also been certain amounts of testing at that point of time, which of course post-testing we got the remittance realizations from customers also. So that's how the containers all got cleared, and we got the payments. That's how there has been a delay. There's been a stretch in the receivable period. But in the working capital, even the inventory period also got stretched. The pre-shipment funding also got stretched because of the delays in shipments. Even though the product was packed, we just could not ship. Every day we speak for the past 2.5 quarters, even the current quarter. And we do not know when this issue is going to get resolved immediately. But at this point, at any given point of time, our company continues to have around 40 to 50 containers worth shipments, 40 to 50 shipments, worth an average value of 1 crore and above. So now, especially when the unit value is also increasing. So that is always blocked. This is over and above our regular inventory, process inventory. So this, hopefully, the issue with regard to the logistics and container shortages will get cleared, at the earliest, and we can have a shorter working capital cycle both in the post-shipment as well as pre-shipment.
Okay, great. I have some other questions. I'll come back in the queue. All the best, sir.
Thank you. We would like to remind participants that you may press star 1 to ask a question. The next question is from the line of Ajay Thakur from Equity as well. Please go ahead.
Hello, sir. Thanks for taking my question. Just wanted to check on one thing. Have we heard from the government in terms of the other scheme, export promotion scheme? When is it going to be implemented, and what would be the incentive rate which the government will be providing for the same? Any idea or any clarification which is coming from the government on that side?
Unfortunately, no. I mean, it remains no for the past 4 months because in the last Concall, also the third quarter Concall also, we have been asking questions. As of now, we did not hear anything about the rates or the scheme process and procedure. So we look forward to it. But of course, we hear in the news, same like when everybody else hears that it's likely to be announced soon, hopefully this month or early next month. That's what we're saying. We are hearing it from the news. We do not have any official position informed by the government, even formally or informally. We didn't get anything so far. So we are waiting for the details.
Okay, and will it be, whenever the new scheme will be implemented, will it be implemented retrospectively, or will it be, from that time itself when it's announced?
The idea of what we had was it was to be implemented from April 1st.
Okay.
That is starting of this financial year FY22. This was what it was told then. Now we will definitely get a clarity once they announce and they inform us all the details. But it was told that it will be implemented from the current financial year from the beginning. So I don't know. It could be a change of stand, or I don't know if they would even take it to last financial year. And at this point, it's too fluid. We are not able to have a complete idea about it.
Okay. And lastly, in terms of the demand, just want to check on how the things are looking from your perspective, because you mentioned about EU, you are seeing improved demand or inquiries. So because of this lot of restaurants opening up, will we see a dual benefit with both the home consumption also sustaining to that level and also improve sales in the out-of-home consumption as well? Or will we have one going down, the other one remaining going up kind of stuff?
Overall, the demand has picked up very well, but of course, it's definitely at this current stage it is going higher than what it was pre-COVID. But of course, this also would create some inventory, the build-up in inventories overseas, and it should be stabilizing. But your question specifically, just because the food service or restaurant chain demand has picked up, does it mean that there will be a fall in the retail? As of now, we have not seen such indication. The retail demand continues to be strong in general because the protein requirement has gone up significantly now with the added restaurant chains and everything opening up. But also the other important point is shrimp. There are other proteins which are even in seafood which are currently few other items which are more expensive than shrimp. So the demand for shrimp has been quite steady at this point because it is still definitely a good choice, and it is the number one preferred seafood item in the United States, especially. It is the number one consumed seafood item. So that way, we're pretty confident that this will remain both in the retail and the food service sector, and we need to see it continues to maintain. And right now, we are in the holidays, and things should be good for the summer over the next 2 months, especially because in the USA it is July, August is all these are summer months as we go. So the demand should be good. So there's no problem with regard to, there's no fall in demand from the retail side.
Okay, thanks. That's quite helpful.
Yeah, thank you.
Thank you. The next question is from the line of Deepesh from Equirus. Please go ahead.
Yeah, hi Chaudhary sir, good morning. Congrats for good numbers in challenging times. Sir, in the presentation you mentioned that shrimp prices are firming up globally. So I just wanted to get a sense that how do you see these prices going up for FY22? And given the strong exports that India has seen from March onwards, I think it's better than even FY20 levels, right? FY19 levels. So will you be able to reach the 60-65% utilization levels this year?
We should be able to do it on the production side. With regard to utilization, we should be able to utilize it. Of course, subject to the farmers going for, because right now the first crop has been good, everything was good so far. We are looking forward for farmers to go for seeding again, which they are doing in some areas. There is also some changes in some species. Some people are going to black tiger, but overall, as long as the supply is continuing to be there, with the current year's demand, like you said, which is at a higher level, we are confident that it will remain for the rest of the year, especially because there was a shortage of product overseas, and that is being currently the news what we have is that overseas the product is being absorbed as and when it is reaching the destination. So there is no at this point there is no inventory pile up, so the demand is continuing for sure, at least until summer and post summer till Thanksgiving, that is sometime in October, November. And so for the rest of we believe it should be good, stable for the rest of the financial year, current financial year. Supply, as long as it is good, yes, definitely we should be looking at completing and utilizing the 50% of the capacity for sure, because it is more, the capacity utilization is more to do with the supply, and I strongly hope that there is no third wave or anything like that for India, which we hear every day, and we just hope that, because we have had some issues regarding employees also during this recent, 2 months ago or a few months ago. So we just hope we don't have issues, and definitely we are confident that we will be utilizing it, subject to the supplies. But regarding capacity utilization, we'll definitely do it. We are not.
Sorry, sir, you're saying 50% or 60%? Because I think we're already at 40% right now. So you're saying 50% for the next year?
No, I mean currently I thought that whatever I looked at current year, we said 50%.
Right.
Current year, I think we have said the complete capacity of 29,000 metric tons.
Correct.
We said 50% is minimum is what we were looking to achieve. That is approximately 14,000 or 15,000 metric tons, let us say. So that is what we are looking forward to achieve in this current financial year. Next year is, of course, as we also add up another line and all that, we'll give more details as we take firmer decisions, and once the things are in place, we'll let you know later on that.
Sure, sir. And sir, how are the prices doing, sir? Because I heard that international prices are going up, right?
Sorry, can you repeat that?
How are the international shrimp prices doing? Because the demand has picked up very sharply, but the supply is still limited, right? So shrimp prices are going up right now, or they're still stable?
The shrimp prices are going up. They have gone up for the past 2 months almost. It's been going on in phase-wise. Almost 3 months, for the past 3 months it's been going up. And they have pretty much been stabilizing at 3-year-old higher pricing. And supply-wise, it is there. There are not much issues with regard to supply as of now. We believe that it will continue to be there over the next 2 to 3 months. And as I said, subsequent to that, it will depend on how the seeding is happening, and also any sort of issues at the farm level with regard to any disease or anything. But currently the supply is good and the demand is also good. Both ways. In your words, we have tailwinds on both sides.
Yes, everything is finally coming together. Sir, secondly, sir, the government recently announced the PLI scheme for the marine sector, right? So anything you are planning? Because I think only 2-3 companies qualify for that PLI scheme. So anything you are looking forward to?
No, the company as such does qualify, but the point is with regard to the capital investment which they have sought after, and also it is basically on the incremental growth subsequent to from now. So we haven't really gone ahead with it. We did discuss internally, but we didn't really go ahead about that because of the capital requirements as such. With regard to revenue, and because we are more focused on utilizing our current capacity utilization, which is like we just asked the previous question. So this year we look forward to utilize 50% minimum of the total capacity of 29,000 metric tons. And next year we look at 70-75%. So while this is going on for the capital requirement of what they have asked the marine sector of around 75 crores, didn't really make sense for us immediately. So at this point, so anyway, as last time, yes, it was an added benefit if it could have been availed. But however, we are more focused on earning our own better realizations and margins with regard to the products which we are focusing on, which we have been pretty successful over the past few months. Yeah.
Right. And so given the higher freight costs that we are seeing for the last 6 months, your manufacturing and other expenses have not gone up, right? So on a per kg basis, if I see, they've actually come down quarter on quarter. So just wanted to understand how was it possible, and do you think the freight costs will hit us in the subsequent quarters?
The freight costs are actually have gone up more. I mean, we have at a significant higher cost from the current quarter, which that is Q1, because all the rate contracts, service contracts have been signed up at higher levels, especially from this financial year. So with regard to going up, we do not see at this point. But however, it is too premature for me to comment, for us to comment at this time, because we have also heard people from some exporters, from shippers from China, paying quite a huge freight amounts shipping to European Union and all that. So there is, until this logistics problems globally kind of settle down, and we do not believe there's going to be an immediate solution for this and to get back to lower freight costs immediately. But we definitely hope things will get better soon. We don't really expect higher freight costs from here, from now, from the current level. But whatever increase we have seen over the past 3 to 4 months, that has all been signed up in the month of April and May of the current year. We have signed the service contracts. That's when the shipping lines signed the new contracts.
Great. So lastly, if you can just help me with the incentives booked in the quarter, and what was the hatchery sales and the value added product sales in this quarter, please?
Yeah, 1 minute, please. Vijay Kumar,
Yeah. Hello. This quarter we didn't book any incentive actually for MES.
Yeah, no.
For MES point of view, we didn't book any because government has not announced anything.
Yes.
Drawback, we booked 4.85 lakhs this quarter.
4.85 lakhs. Okay.
Yeah.
Okay. And sir, what was the hatchery sales and the value-added product sales in this quarter?
Sales this year 7 crores. This quarter 7 crores.
Okay. And value-added products?
This year came to around 24 crores. Entire year, financial year.
Understood, sir.
No.
The value-added proportion?
Hello. Sorry.
Yeah, value-added proportion in sales in the fourth quarter, sir. Value-added products that you generally give that number, how much you have sold as a percentage of overall.
We will give you later. Actually, we are not by
Sure,
like that.
Sure, no problem. I will get it later. Yeah. Okay. Thank you, sir. Thank you, and all the best.
Thank you. Participants, to ask a question, you may press star and 1 now. The next question is from the line of Vincent Andrews from Geojit Financial Services. Please go ahead. Mr. Vincent Andrews? The line is unmuted. Please go ahead with your question.
Hello, am I audible?
Yes, sir.
Yeah. Good morning. And congratulations for the business numbers. Most of the questions have been answered only one question I have. That is related to the capacity utilization. You have already mentioned you are expecting around 50% in the current FY. But I remember during last conference, you had mentioned like out of this total capacity, 5,000 capacity related to the value added, and you have already arrangement with the clients for this capacity. And since you have mentioned the previous remarks like the Horeca segment is opening up now in the US. So, what is your expectation for the value-added capacity, and how much increment margins you will get out of it? Yeah, that is the question.
The first thing regarding the capacity utilization, I was mentioning to the previous caller about the total capacity utilization of 50% on the overall capacity. Now, with regard to the value-added, the ready-to-eat products specifically, we are of course looking anywhere between 60 to 70% in the current year, and that is also of course subject to our workers and subject to the employees being continuously being available. But we are focused on utilizing 60% on the ready-to-eat primarily. Now, with regard to margins of ready-to-eat and again on the capacity utilization, we did mention in the previous call that we would be looking at optimum utilization of ready-to-eat, in fact completely. We in fact do have the order book with our customers. The issue is more about with regard to operational efficiencies with regard to ready-to-eat. So we are trying to gain them in the current period. So as we do that, we will be looking at optimally utilizing to 70-80%. But we foresee that we will be having a minimum production of 60% of the 5,000 metric tons this year, for sure, minimum. So regarding margins, I think we have informed prior it is approximately around $1.5 to $2 per kilo over and above the ready-to-cook items. That is with regard to the ready-to-eat items. But then of late we have also been developing value-added products in the ready-to-cook also, so which are also providing us similar margin, but in fact same as ready-to-eat. So we are focused on building up more production of those products, and thereby both on volume scale as well as which also makes higher profitability, higher margin to the company. That's what we are focusing on.
Yeah, thank you. And one more question is like export incentive. If any delay you are seeing with the government to implement the new sector. So is it manageable from your end? Is it possible to pass on to the farmers, or is it possible to increase the price at export sales level without affecting the competition there? How you manage that?
Sorry, can you repeat the question?
How you manage the export? How you manage the export incentive? Till the time the new sector is coming, how you manage? Is it possible to pass on to the farmers? Is it possible that?
See, first thing is incentive is not something which is given by the government as a feedback. It is not something which is given by the government on a farmer basis. It is basically a part of the income of the company, and it is part of the income of the industry. So when the farmers are having their farm gate price, it basically includes everything, things like not just the incentive but also the costs, the overseas selling price, and also the supply we are setting. So it is all a multi-factor point with regard to the farm gate pricing. So yes, the incentive, if given, one given by the government of India, is also being passed on to a certain extent to the farmers depending on the situation. And that is the market dynamics. So it's not something like where we are awarding separately something to the farmers. Okay.
Yeah.
It's an indirect benefit which the farmers get through the market.
Yeah, understood. That's all from me.
Thank you. The next question is from the line of Nitesh Jain from Birla Mutual Fund. Please go ahead.
Hi, good morning, Mr. Sir.
Yes.
Sir, I basically considering the dynamics of your order book, mainly from the US customers, and also the labor availability at your factories, both the factories, and also the shipping or the logistics problem which you explained in detail. Considering all these three and the trade-off between all three of those, then what kind of volume can you do by 22 in current fiscal year on your capacity of nearly 29,000 metric tons? Of course, there is fourth element also, which is the most important one, which is basically the culture itself and the farming activity. So, given I know this is quite dynamic at this point, but still, would you believe that you can do, say, upward of 20,000 tons? What is your internal estimate for this financial year?
Sorry to interrupt, Mr. Jain, but there is a disturbance coming from your line. Request you to mute your line when the management answers your question.
Sure.
Can you said how much are we going to utilize our capacity? Is that what you asked?
Yeah.
Which I just mentioned, respond to one of the previous callers, that we are pretty confident that we will be utilizing at least 50% of our total capacity of 29,000 metric tons in the current financial year. This is not just to do with order books or just to, of course, like you said, after considering the supply situation also. But mainly the thing is we are improvising our efficiencies in the new facility. So most of our volume of the 50% of the total capacity utilization will be from the new facility. So we are actually improvising it. As we grow it further, we will be able to. So that we are looking at anything over 15,000 metric tons of the 29,000 tons. We are looking at anywhere between 14,000 to 15,000 metric tons. That's what we are looking at between all the markets.
Yeah. Sir, basically here there is a follow-up question here. I mean, in a robust demand scenario which is prevalent currently, particularly in US market, where 85% of your products you sell to US geography, I'm actually quite surprised or perplexed to understand why we are guiding only 50%, given the fact that we have a 20,000 tons brand new most efficient plant in the country, and we have a good demand from the US market. So why only 50%? Why not 70-80% type of utilization? What is the problem here? This is point number one. Point number two, if you still guide for say 50%, when do you see Apex Frozen Food as a company can do nearly 22,000-24,000 tons of sales in any one particular year? When that can happen?
I think, why we are only looking at around this 50-60 or something, and 50-60% in the first year, is of course considering all factors of efficiencies, even in the value-added products, which is not ready to eat, but even for utilizing the new facility of Apex, we also need to support it with a lot of yield product. We are not doing commodity shrimp, which can be done in mass volume. So naturally, when you want to do more to the markets like USA and European Union, where most of the value-added products go, even in ready to cook, even in the raw.
So for that, the capacity expansion is happening. The more and more, we already have one pre-processing facility which is being utilized currently, which is mostly supporting the old facility. We are also adding there are plans to add additional another pre-processing facility by the end of this year, which is available for next year. That is why in the current setup of infrastructure, we believe that with the amount of value added, when I'm saying value added, it's not ready to eat. What I'm saying is with the amount of field product, what we can cater to the processing facilities, which have a 29,000 metric tons in total. We have to support those two facilities with that much amount of field product, which are required for the markets like US, where you rightly said, which has 85%, 80% of our total business. So we need to provide more and more field products, which we are confident that we'll be able to do more next year once we also finish up the other support facilities. So that is the main reason. Only for doing commodity-based shrimp, the shell-on cold shrimp, with the raw commodity shrimp which we do to China, if we do only such product, we can do 75% of the total 29,000 metric tons in the current financial year itself. Actually, the problem was that our company is not focused on doing commodity shrimp or commodity products, to commodity markets. Rather, our focus is more on value enhanced product, even in the raw stage. So for that, the facilities which are, of course, the new facility, which is the 20,000 metric tons, but however, it has limitations on the amount of pre-processed product which can be catered to under its current floor space. So we are also going to add that further, and we are, of course, also getting some support from our existing pre-processing facility. Thereby, further improvement will be there as we come to the end of this financial year. So from next year, we believe it's going to be much higher. We get supported by these field products. That is on that front. I'm sorry, your second question I can get you.
No, I was just asking, like, on a practically, given the portfolio or the product which you focus on as a company, in one particular financial year, how much the maximum sales that you can do on this 29,000 meters? Is it 20,000 tons of finished product? Is it 22,000, 24,000?
We could do around 21 to 22,000, 75%.
Of the finished volume.
Finished product,
yeah. And lastly, US shrimp prices have been going up in the last couple of months, particularly. Can you confirm how much they have gone up in percentage terms?
Sorry.
Yeah. The US buying prices.
Between 15%.
And whereas in India, farm gate prices are stable, or have they also gone up, or they are stable?
The farm gate prices have been stable. They are not gone up.
So to that extent, we must.
I hope you understand where the demand is high both. Yes, supply is high domestically.
Perfect. Got it.
That answers tailwinds on both.
Yeah. Perfectly got it. Thank you very much. Appreciate it. That's all from us.
Thank you. The next question is from the line of Ashwini Agarwal from Dashboard Investment Management. Please go ahead.
Sir, just going into some figures, last year you did 11,700 tons. Out of this, how much tonnage was ready to eat and value add versus commodity? Could you have those tonnage numbers available?
The 11,000 metric tons do not have any ready to eat. Remember the first financial year. You mean last year means FY 21. Sorry.
Yes, FY 21, correct.
last quarter was 21%, but ready to eat for
Hello.
Yeah.
It is around 2,500 metric tons.
How much, sir?
okay, very good.
How much? 4,500 tons. Or 2,500?
2,500 tons.
2,000 was ready to eat. Okay. And how much would be the value added on the ready to cook segment in tons?
Sorry, in ready to cook, value added would be almost in the approximately around 7,500 to 7,500 tons, I think, final product, finished product which is exported, because we do not have more than 10% or 10 to 15% of our total ready to cook as commodity or the baseline products. We have a majority of our production, what we have been doing so far is value added, or sorry, when I'm saying value added, steel product in the ready to cook also. So it's only around 10 to 15% of. So it's around maximum on a high side it will be around 800 to 900 tons, very high side. So that's the maximum in the form of headless chef. Whatever we do.
Okay. And sir, you're adding another 5,000 tons of ready to cook, right? At the end of fiscal 22, which is the current financial year, you expect to have to be about
5,000 metric tons of ready to eat. Sorry.
Ready to eat.
So another 5,000. Yes.
So what's your remaining capex for this year, sir?
We expect it to be completed before the end of this current financial year. So it's not significant, but it's not more than a million. That's around 7 crores maximum. We plan for around 5 to 5.5, but we are planning to make some components, so it's going to be maximum 7.5 to 8 crores.
Okay. And when you spoke earlier in the conversation about 17,000 tons or 18,000 tons for the next financial year, 2023, are you taking ready to cook and expanded capacity is 34,000, or that would be not utilized over the next year?
No, I have not mentioned the number of tons of capacity utilization for next financial year. What I have mentioned was the current financial year, we are looking at a minimum of 50% of the total utilization, which is anywhere between 14,000 to 15,000 metric tons. And for the next year, we are looking at 70,000. So in this, we have not factored in the additional 5,000 metric tons of ready to eat. But when the additional line comes of ready to eat, our focus will be to utilize the ready to eat lines with a full efficiency, even if it is at a little bit of compromise on one of the ready to cook lines. So I hope you understand what I'm saying. Where we try to utilize more of the ready to eat lines, ready to eat capacity, so that we have better realization as well as better margins.
Okay. And coming back to the shipping cost, I understand that in the industry, it's typically cost including freight. So freight, whatever is the freight cost, has to be absorbed by you. So does that mean that because you signed new contracts with pretty much all the shipping lines over April and May, that there will be headwind to the margins on account of the shipping costs, or are we reflecting in the higher prices of ships that are prevailing? I'm just trying to figure out who ends up paying for the shipping costs at the end of the day. The consumer
reason why the shrimp prices is also going up is also freight costs, which get added to the cost of the ship, which will be passed on to the customers, which thereby gets passed on to the consumers eventually. That's why, because of the freight cost is to deliver, to be delivered. So the freight cost is increased across the board, whether it is China, Asia, sorry, European Union, US, Canada, everywhere the rates are increased, and thereby the prices also. There has been some effect of the freight cost also, which has been set off, not just the demand. So that's where I have mentioned 15% earlier, the increase of pricing. But that, of course, we will be looking at the increase pricing more in the future as you know, because of these logistics issues, the shipment, there's a lag of delaying the shipments by almost 3 to 4 weeks, even after the production is completed, after the product is completed, because lack of equipment.
Yeah. So hopefully on the margin front, you have the tailwind of good supply, the sort of more value-added product mix in the revenue mix, more linked to heat, and hopefully the shipping costs are being paid for via higher ship prices. So on the margin side, we should have it is taken care.
We should be looking at a better margins for sure, as long as the situation, the rates, like you said, there are some aspects of rates and some aspects of some increased costs which are factored into the higher prices, but also there's an increase in because of the demand, there's also an increase in pricing. So overall, the increased pricing is also taking care of these enhanced costs. That is true.
Yeah, sure. Thank you.
Thank you. The next question is from the line of Nitin Awasthi from India Security. Please go ahead.
Hello, sir. Just wanted to understand on the balance sheet, capital work in progress shows 15 crores. So, where is this? What is the asset being created? Is this under the hatchery expansion?
That is 1 minute.
Yeah, it is hatchery expansion. Hello?
Okay, sir. Okay, got it, sir. Now, coming to follow-up question on that, have we reached the optimal size that we were looking to be in the hatchery business, or are we looking to scale it up further?
Sorry, can you repeat your question, please?
So, have we reached the size that we wanted to reach in the hatchery business, or we intend to scale up even further, even faster?
No, we definitely have reached the size. In fact, we have not yet been able to utilize the capacity even as on date, because we are waiting for the approvals from the government of India, Post Aquaculture Authority, primarily, and some audits to be done. But for sure, with this added capacity, we definitely, it is very much sufficient for us to take help with regard to growing our partnerships, the network with the primary producers, the farmers. Definitely, the capacity is very much sufficient for us, for our company. We are not looking at any further scaling with regard to hatcheries as on date. We may be looking at alternative species simultaneously, maybe, but at this time it is too premature out of these hatcheries. Support our farmers, thereby we buy the products from them once they harvest.
Okay, so noted. On the other front, we're seeing a lot of these farmers going for black tiger this time around, and just wanted to understand from the processor side of it, because we have been servicing our customers with Wanani all this while. Once black tiger comes into the picture, how does it change? So do we start getting a premium for? Can we do the same product in the same manner and get a premium for the product because it's black tiger? Or will it be shrimp? Doesn't matter which shrimp at the end of the day. Could you please comment on that?
Yeah, in fact, one of the reasons why I had mentioned just a few seconds ago about we looking at alternate species is also about this black tiger. Now, your question regarding getting a premium for black Black Tiger is nearly involved. It will definitely have a higher price, but you can say high prices is going to, demotivate the consumer to look at that species. We are going to look at it as shrimp. Yes, for the appearance, flavor profile, the consumer is willing to pay extra, but it is little extra. It's not that they want there is a huge price difference between anime and black tiger, between the white shrimp and black tiger. But yes, there are customers that way who are looking for the supply of black tiger from across the globe. It has been limited because our world has been dominated with anime, and it has been proven very steady and consistent supply chain with regard to anime supply. Now, as Black Tiger becomes more and more successful over the next few months and years, if it remains steady and consistent in supply, for sure it will have its own, it will create its own shelf space across the globe. But it will not have a significantly high premium. There will be a price difference for sure. Black Tiger will fetch better prices because of its, as I said, flavor profile and appearance. But it is not going to be too expensive. If it is too expensive, it will be a turn-off. If the consumer will be turned off. So that is also a key point. So it is going to be very important for us to maintain a reasonably stable pricing of Black Tiger products overseas in comparison to anime. So that is how it is. Limited supply can get consumed at little higher prices, but once we want mass supply to be placed in the market, we need to be reasonably priced when compared to anime. That is how the market has taken it so far. That's how it is. When it became too expensive, Black Tiger ended up being kind of a turn-off by many of the consumers.
Noted, sir. Thank you, sir. That was all from my side.
Thank you.
Thank you. The next question is from the line of Srinivas Reddy, and it's an individual investor. Please go ahead. Mr. Srinivas Reddy, your line is unmuted. Please go ahead with your question.
Is it audible?
Yes, sir. You may.
Yeah, I'm Srinivas. I have a question for you about that NES license. So, sir, as you have booked earlier quarter NES license, whether you have received the total amount or is there any pending amount in that?
No, we have not booked any MEIS for the quarter.
Okay. Now, NES
was informed earlier.
Yeah.
Sorry.
I'm
The MEIS was only booked. The MEIS was only booked till August, pretty much, because September it was hardly. So it was only booked till the second quarter.
Okay.
It was not booked subsequent to that. Once the government made it clear, we booked it.
So, what are the book days we have received everything?
Sorry.
Whatever the book license, we have booked it in the book and we have received it.
No. It is still receivable. It is receivable.
Okay. So when can I expect the new scheme, sir? So I heard that first question is there, but just I'm asking, is there any?
Yeah, I'm sorry. We are also waiting from the government of India to announce soon. So we are waiting for the announcement. Once they give a clarity, we will keep you informed in our future Concalls. I'll definitely make it known. And I'm sure you will also be aware from the media. Yes, thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Subrahmanya Chaudhary for closing comments.
Thank you everybody for coming to this Concall of Q4 and the full year FY21. We hope you continue to remain safe, you and your families, and hope you have a good day. Take care. Bye.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.